Your thoughts on where equities are headed given the recent developments?
Yeah, I think the equities are in for a muted, year this year. There are too many uncertainties out there, and that's why we think that positioning needs to be more around the volatility in the market. Because while a lot of things remain uncertain, I think what is clearly getting more certain is the fact that markets are likely to remain volatile.
Well, the question really, how much have markets really priced in the Ukraine risks? And that is, by the way, the question of the day.
I think there is still a lot of, unknowns there. So I'm not sure if everything is yet priced in. It's been going on for quite a few weeks. There are always new developments every day. So I think market is just taking it day in. And I think there is still some downside risk there if, the crisis sort of escalates.
So, I mean, you have the Ukraine crisis. You also have what's been going on is this aggressive Fed tightening that people are pricing in as well. We just had JP Morgan coming out over the weekend saying the Fed could actually hike for the next 9 straight meetings as well. Where then do you look when it comes to opportunities? Where do you actually take shelter?
I think that's why we are moving to a slightly more defensive positioning. We are clearly in a slowing growth environment wherein inflationary pressures remain. We are looking at some of the tighter stances globally. But in emerging markets, and especially, when it comes to Asian markets, we do think there are selective opportunities. We are still, quite bullish on markets like China, Taiwan, Hong Kong. We are not very, comfortable in having increased exposure to markets like, say, Korea, Australia, or even India. So we are reducing our exposures there. But it's more moving from a completely cyclical exposure to a slightly more defensive positioning, hiding in higher quality names, hiding in low volatility names, because that's where, the defensive pockets are in the market.
Are bonds still a place to actually get that diversifying factor from equity risk? Or is there other areas you have to look at or other assets now?
I think there's always that angle of increased diversification, and I think right now is probably the right time to add that diversification, and that's where emerging Asia actually comes into global portfolio allocations, wherein most of the global managers have been largely overweight U.S. equities for quite a lot of years. And we do think that there is, a whole angle of diversification looking out into international exposure and especially, selective exposure to EM Asia.
Rupal, apart from China, where else in the EM universe would you be adding exposure? We've heard the likes of PBOC Governor Yi Gang, as well as Bank Indonesia Governor Periwarjo saying that, EMs are in a better position this time round. They're not too concerned about capital outflows.
I would actually agree. So, the last time when taper tantrums happened in 2013, a lot of the Asian economies saw massive outflows because at that time, most of these Asian economies were running huge current account deficits. The reserve adequacy ratio as a percentage of GDP was quite low, which is not the case right now. So I think the Asian economies are much healthier. And hence, the flight out of larger EM, I think, is less of a risk, and they're less vulnerable, I would say, to U.S. Monetary policy, and that's what we've been seeing. That year to date, even though a dollar, for example, has been moving higher, emerging markets have still done better than developed markets. So I think relative to developed markets, there's clearly a case for emerging equities this year.